All right, let's get right into it. For decades, the entire global financial system has been built on one single, rock-solid assumption. The US dollar is king. But what happens when that assumption starts to show some cracks? Today, we're going to dig into the hidden forces that are reshaping global money. And believe me, it's a story that goes way deeper than the daily headlines.
This quote right here, it just nails it. While everyone's talking about the stock market, the real, foundational story, the one that holds everything else up, is happening with the dollar. See, smart money isn't just looking at the fancy penthouse suite. They're down in the basement, checking the foundation for cracks.
And this is where we really need to shift our thinking. We're all conditioned to think the dollar is about inflation numbers and interest rates. But that's not what's driving things right now. This is about raw power. It's about geopolitical tensions. And it's about the start of a massive global reset.
So let's talk about the first major crack in the system. I like to call it the breaking of the trust instrument.
I mean, think about it. For decades, the US-Europe alliance was the bedrock of global stability. But just look at this list. You've got trade threats, arguments over defense, conflicts over energy. Even the very structure of NATO is showing fractures. These aren't just minor squabbles. This is a fundamental misalignment. And the markets are finally starting to price that in. And that brings us to the really big, anxious question, doesn't it? What if that bedrock alliance isn't guaranteed anymore? Just asking that question is enough to send shockwaves through a financial system that was built entirely on the assumption that it was. Which brings us to this crucial point. The US dollar is so much more than just paper money. It's a global trust instrument. Its value isn't just backed by the US economy, it's backed by a whole web of alliances and a shared belief in a stable world order. So, when that trust starts to crack, the foundation of the dollar's dominance cracks right along with it. Okay, now let's throw another huge factor into the mix. An accelerant, really, for this whole process. Donald Trump.
Now, let's forget politics for a second and just think like a market. To investors all over the world, Trump isn't just a politician. He embodies a powerful new variable, uncertainty, but with the authority to make it happen in an instant. He moves fast, he's unpredictable, and he forces everyone else to react.
His whole approach is crystal clear. America first means our interests come first. It means using tariffs as a weapon instead of old-school diplomacy. It means putting direct pressure on our closest allies. Now, for markets that absolutely thrive on predictability, this approach is like throwing a giant wrench into the gears. It forces them to hedge their bets.
And that brings us to the evidence. Let's take a look at exactly how global capital is reacting to all this uncertainty.
You see, in the past, whenever there was geopolitical stress, money did one thing, and one thing only. It rushed straight into the US dollar, the ultimate safe haven. But this time, something is definitely different. Instead of piling into the dollar, capital is actively spreading out, looking for safety in a bunch of different places all at once.
And the signs are everywhere you look. Gold is rallying. Key commodities like oil and copper are gaining value. You've even got Asian currencies holding their ground, while the dollar index itself is kind of struggling. This isn't random. This is a coordinated, decentralized move away from putting all your eggs in that one American basket. What this really tells us is that the whole psychology is shifted. Big investors, even central banks, are no longer assuming there's just one single safe place to hide. They are actively getting ready for a world that's more fragmented, a multipolar world order. And hey, even right here in the United States, the signs are clear. The dollar's strength is choppy at best, the bond market is all over the place, and equity markets are, well, they're nervous. Wall Street isn't popping champagne corks over this, it's quietly buying protection. In other words, it's hedging.
Europe, meanwhile, is in a really tough spot, kind of caught in a vice between American pressure and its own internal problems. So you're seeing their stocks struggle, energy security is a huge concern again, and there's a quiet but steady flow of capital heading for the exits. The euro itself just looks structurally weak in this environment.
Now contrast that with Asia. They are being incredibly proactive. China is systematically cutting its dollar holdings. Japan is walking this tightrope, trying to balance stability with all these new pressures. And all across Southeast Asia, nations are stacking up gold. They are not waiting to see how this story plays out. They are actively preparing for a future where lots of currencies hold power.
So, when you put all of these pieces together on the chessboard, it leads us to the single most important part of this entire story.
Which brings us, of course, to the big one. The question that's been hanging over this whole explainer. Is the US dollar about to collapse?
The answer, maybe surprisingly, is no. That's not what's happening here.
And this right here is the absolute key. This isn't a crash story. It's a transition story. It's about the end of a monopoly, not about the company going out of business.
And you can see that shift happening right here. We are moving from a unipolar world with one dominant currency and one clear center of power to a multipolar world with multiple currencies, regional power blocks, and a new focus on trust that's backed by real stuff like commodities. The dollar isn't disappearing, but it's being forced to share the stage.
So, what does this actually mean for you? What is the smart money doing about all this right now?
Well, over the next 6 to 18 months, you should expect more of the same. That means more volatility in currencies, continued strength in gold and commodities, and a more defensive game plan for stocks. Every little geopolitical event is going to carry a much higher risk premium than it did just a few years ago.
And look, if you think this is all just another news cycle, remember this historical pattern. Major financial resets almost always start with these two ingredients: stress in the world's dominant currency and fractures in the geopolitical order. By the time it becomes obvious to everybody, the window to get positioned for it has already slammed shut.
At the end of the day, understanding this massive transition isn't about being fearful. It's about having foresight. It's about seeing the chessboard for what it is today, not what it used to be, and understanding that the rules of the game are changing, right here, right now, right in front of our eyes.